professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Happy Friday, TGIF. I think today's TGI. I think today's Friday, right? I've been running around like a chicken without a head here this morning. 37 different things on the go. So my apologies. Just get all the pages up and running. I do like the idea of somewhat being on time, at least trying my best. And I don't like you guys just sort of sitting there. So I told Chris, hit the button, let's go. All right, now how am I gonna get YouTube to cooperate here so I can see the actual itinerary, but also see what you guys are chatting about, because I can't seem to do this both at the same time, which is extremely frustrating. So I can't see what you guys are interested over there on YouTube. Maybe it's better that we don't interact with the public here on this free show. We just go through our itinerary. So here we go. It is now officially, oh geez, now I got to move this over here. There's got to be a better way that YouTube does this. It's either super, super small over there on OBS, or it's the entire full screen. I can't sort of like go halfway, which is a bit frustrating. Anyway, okay, so I put the date timestamp on here, so hopefully you all see that. And let's do this. Actually, you can't see it because the itinerary thing's right there. Well, all right, so if I click on the calendar, let's see what happens on the YouTube page. Does that show on the YouTube page? There it is. Yay. Okay, so 6 minutes past top of the hour. Started, I think, about 2 minutes ago. So we'll try and wind this up here by 9:30. And then that way, that's a good 25 minutes or so. And I think that's probably a good window for a daily update. So here we go. 3, 2, 1, boom. Today is, of course, Friday, TGIF. It's also the last business day of June 2024, which means it's the last day of Q2 2024. So that means probably going to have a lot of window dressing around the market. Obviously the semiconductor stocks are in vogue right now. And we're probably going to see a bunch of sort of mutual funds all sort of pile into those stocks here today, just so that when the statements go out to their clients go, oh, look at that. We're all invested in NVIDIA and whatever other name. It's the game that's played in this silly game. It's a bit of a fraud, but man, it's the way capitalism is, I suppose, these days. Half BS, half scam, half caveat emptor. Welcome to the human species, eh? It's it's tragic, but oh well. If anything, that's one of the reasons, I guess one of the main selling features about things like blockchain is theoretically, if you can interpret the data, you understand how to read the data. There should be no lies about any of this. But anyway, it's just an interesting anecdote. It's what typically happens here at the end of these quarters. This is also the end of the first half of 2024. I don't think anybody is like overly impressed with 2024. And if anything, the very interesting circus show that we saw last night with the 2 candidates to be leader of the Western free world, oh goodness, that was a bit of an adventure last night. I'll tell you that much, by crackers. But anyway, let's get into sort of the daily brief and maybe hopefully give you guys some value here today. Breadth for the actual dashboard, S&P 500, kind of wishy-washy signal here. Short term, a bunch of names have rolled over, looked a bit heavy, so we've got actually a little bit of an M there on the the fast signal here line, and then the slow signal line, sort of like a little bit more of a medium term perspective. Still working higher. And I would also say too that we're basically just oscillating around the 50 line here. So quite literally, that's sort of like, is the glass half empty? Is the glass half full? well, regardless of whatever your perspective is, it's sitting right at the halfway mark. Um, Ideally, of course, we want to try and take trades, I suppose long, go turn on the tap, fill up the glass when it's almost empty, and then conversely, drink a little bit and maybe prevent the glass from overflowing when it's full right up to the rim. So right here, right now, it's kind of a meh market state. If anything, I'm a little concerned. The slow will drag itself higher here. You can see what happened here back, heading into my birthday. We all remember that wonderfulness. And then if we get a sharp, downturn, what this probably implies is a whole heck of a lot of volatility in our near futures with not really a clear trending direction, just a whole bunch of oscillation. If we actually look at things like the S&P 500, that kind of makes sense. Here is our ES way up top here. We've come an awful long way. This is just literally from that May pivot there. Are we carving out a bit of a double top? Maybe. Interesting to see that bot setup off of the 25 level there wasn't the cleanest signal, but nonetheless, hopefully you can see 3 higher lows. Nice little inside bar reversal. So I wouldn't have faulted anybody who did go long through that event. There's the bot objective. There is the price target. Interesting how we banged into a 4669 here, and literally that just stopped the market in its tracks. So, all the algos and bots and stuff that are trading off of things like chaos theory, they're all getting active here. What's interesting about this price action up here is, our time tested overbought, oversold indicator is now saying you missed the bull run. I mean, if you did want to be bullish, this was where you were supposed to be thinking to buy. I don't necessarily have a signal out of things like RSI here, but RSI technically is overbought. So a little bit dangerous there. And then this is really interesting. Of course, these, I think actually level oneers are doing these concepts right now. Understanding the concept of divergence, you can actually see the MACD histogram here did not make a new high when we pushed up off of this high. The momentum of the market did not make new highs here on this push up. And so you can actually see this will become a confirmed bearish divergence in price momentum. That's a pretty powerful signal if we get any kind of weakness at all in the market here. Let's see if we can maximize that for you. Whoops, that's not what I wanted. Let's try that again. There. So this was a lower high. Right? So everybody should acknowledge that. So if this thing does break down and head through these lows here, that will actually confirm a big bearish momentum divergence. And that's ugly, folks. I mean, gee whiz. What are we supposed to think if we see the market smiling at us? So just understand that, we've come an awful long way since that May trough. We're hitting a bunch of upside objectives. I'm a bit surprised, to be honest with you, that we haven't hit this bot objective yet. So, maybe we have Monday, Tuesday, Wednesday or something of the coming week, some sort of blow off top. And then, all these divergences start confirming and stuff. Of course, we already have Willie Stupid. And all hell starts to break loose following that. So let's go see itinerary item number 2. That being the Econs. Let's see what the hell was reported here today. Econ wise, let's see, do I have it over here? Here we go. So interesting. The inflation data seems to be coming in a little bit softer. You do see that the U.S. housing market and the housing market inflationary pressure seem to be abating. And I did read some articles recently that they're basically saying that the housing data itself, Unfortunately, because housing and shelter costs, I guess that's what they're calling it, rents, all that kind of stuff. It's such a big component of the consumer. And of course, the consumer itself is consumer-based economy is a big part of this. We are seeing things like personal spending is coming in weaker. And I suppose you could argue with the Fed wanting to raise interest rates to put the kibosh on this big inflationary push. It does make sense. I mean, they are getting what they want. This is the only way that they can control the economy is to basically punish you and I. And I think that's exactly what they're doing here. But it is interesting to see that the PCE indicator, it's slowing down. We're not, seeing that torrid pace of increases anymore. The interesting thing about this, though, is I think that the Fed actually would like to see this indicator like trending down. And what I think you see is it's kind of just sort of flatlining. So there's the core PCE month over month. And, in essence, how is that calculated personal income? You can see came in slightly better than expected. And the personal spending, right, which is sort of the big sort of, what are the consumers doing with whatever money that they're getting? You could actually look at this argument and say, well, actually the consumer's balance sheet is actually looking a little bit better. They're back to work. They're coveting their jobs, and it'd be interesting to see what Jolt's numbers and stuff are. But at the same time, too, they are reducing their spending because, and primarily, I think this is the case, is that everything's so much more expensive, and I think that the consumer is going through sticker shock right now. So on balance, and as we sort of said earlier, or at least I said, I don't think that the Fed is at the point where they're like, this is the data that we need to see to justify lowering rates. Because you can see the price index, it's not really moving. Still 0.6 above that long-term 2% inflation number that they want. And it's being very stubborn here. So my hunch is Fed probably comes out, says things like, well, we just don't have enough data to justify lowering interest rates, and we'll just, we're still wait and see, and we are data dependent. I did find it interesting that the market actually tried to pivot back to the upside earlier on today on this Michigan consumer sentiment number that came out. And the irony of it all is that that's not a very good number, folks. And interestingly enough, this number is even lower than the previously sort of finalized University of Michigan consumer sentiment number. So it's not really a hell of a lot to get excited about. What the scuttlebutt, the news, the justification for whatever rally that did ensue when it did was that, well, these numbers came in better than expectation. The market was looking for an even further meltdown in the consumer, and actually consumers feeling a little bit better than what they were expecting. But still, the consumer's not happy. Anyway, we'll see how that develops over time. But that did give the market a little bit of an up. I think probably the one thing that actually caused the market to feel a little bit better here was the Chicago area purchasing managers index came in actually much better than expected. But remember, you want to see these numbers above 50. 50 actually implies economic expansion. So, the previous number out of the Chicago region was an absolute disaster. I mean, like literally fall off a cliff disaster. Things are better, and I think that might be attributable to the fact that, things like interest rates seem to be relatively happy here. I don't know. I mean, I'm sure there's probably local things going on in the Chicago area. Did notice there's one gentleman actually who does these social media posts, and he's just walking around Miami most of the time, Southern Florida. And he relocated himself up to Chicago, I guess, to visit his family and stuff in the summer because Miami was getting flooded out. And I actually think that his social media, he puts out, he gets like 100,000 views on his videos and stuff. And I actually think to a certain degree, he actually boosted the Rockport real estate market, because when he first got there, he was reporting house prices were like 200, 250,000. And I'm very interested in buying some real estate in the US Midwest. I think there's some very interesting, compelling stories. I mean, hell, I can go buy like a 3-4 acre, 3,000 square foot, 4 bedroom, 4 bath place for like 250,000 US. I can't tell you what the price of a place like that here in China Day is. It would be well over a million Canadian idiot, loony garbage money. But nonetheless, still over a million of those garbage dollars. In fact, I even told my accountant when I met him the other day, I was like, I want to burn through all of my Canadian dollars. I want to get the hell out of this country. And I do not want to look back until, probably in the 2030s kind of idea. But anyway, that's my personal conversation. Anyway, point of the matter here is I don't think the econs came out like stunningly bullish. I think they were just sort of like, well, in line with expectations. And then add insult to injury following. Look at all these damn Fed speakers. So my hunch is probably the market is moving around mostly today, just based purely on what these guys are saying. And you can see we got two of them here back to back. And they're probably driving the price. If we pull up the price charts, we'll probably see that they're all over the place, just based purely on when these clowns start talking. All right, so there's sort of your economic backdrop. No offense, but I think the summary here is just a big hurry up and do nothing burger out of the econs today. As I had said, stock market wise, interesting. Fed speakers probably have been saying things like, well, the consumer's feeling a little bit better, but that PCE is still coming in well above forecast. So as a result, we're still data dependent, and we want to see multiple reports of friendlier data. Interesting. Who can tell me what this candle is? And actually, this is my favorite price candle. I've been trading a lot of these lately, and been talking on the site a lot about this. So ironic that a guy I used to work with like 10, 15 years ago, this used to be his bread and butter, this one candle here. So that's a very, what's that? All right. Chris is trying to keep me honest here time wise. But that's a very interesting candle, folks. So let's see how this develops through the coming week. And of course, I suppose you could argue, what are we supposed to think if we ever see the market smiling at us? It obviously hasn't yet, but if we go through those lows next week, actually, this would be a fun assignment. It also gauge how many people actually watch this video. If you could go on the YouTube channel and type in what type of candle pattern is that? One candle. This is today's price action. And is that a bullish candle or a bearish candle? That might be a good way for you guys to interact with us. I already gave you a hint here about how I'm thinking the stock market is with our old buddy Willie over here. And of course, we also talked a little bit about that massive potential divergence that's forming. Also interesting too, you can see how the buyer's momentum has really started to wane. And we might actually even get, no, it doesn't look like it quite yet. But anybody who's, of course, been a student of mine should appreciate when you start seeing lower highs out of things like OBV indicators and volume studies. So that in itself should actually, a lot of TRIers should look at that and go, uh-oh, are the bulls potentially starting to fall asleep? Haven't quite yet, but there is the potential. We'll see. I won't go into detail. Maybe in the after party, if you guys are interested, we can break this down. But that is interesting to see. So we'll see how that goes. All right, I guess finish off this free broadcast. We talked a little bit. We didn't really talk too much about crude or any of the commodities here today. Spent most of the time talking about the stock market. Maybe in the after party we can go through, look at some of those things. I think we'll finish off. Obviously, it's a contentious topic. Mr. Biden, and I'm the type of person where I don't really want to make any personal conclusions out of what I'm seeing. I actually like to pull up these kind of this page we specifically created on the website on the dashboard to give me the ability just to see what the broader world is thinking about certain things. I don't even really have to even read the news headline. All I really want to do is just see what the headlines are. I guess news article. Um, but I don't want to. All I want to see is just sort of what the headlines are and what is that sort of like what are people thinking kind of idea. That's usually what these news outlets do. And I'll tell you, whenever you see a whole bunch of them all say sort of the same thing, especially out of like, if it's a US event, something like out of the BBC, I think is not a bad sort of like foreign look at what's going on. And I'll tell you, I'm seeing just an absolute ton of comments. I don't know whether you watched it last night. I don't think Mr. Biden did himself any favors last night, and he came off at one point looking very, very senile. So I wouldn't be surprised if a big chunk of what you're seeing, sort of like uneasiness about things like going and strapping on a bunch of risk. Maybe that's people aren't feeling too optimistic about this. I will say though, and I thought it was interesting. We have one site member who actually got me involved in the Solana network to begin with. Love hugs and kisses, Stephen. He loves to watch all these little meme coins over there on Solana, and I suppose we could probably also do the same thing with things like actually screener signal spat up a nice little buy signal on this thing. Look at these W's. Oh my God, so sexy. So I'm going to be looking at that in the after party in earnest. But what is that DJT, right? Isn't that Donald Trump's stock? Suppose if my internet will work. That's kind of weird. All right, it's just stopped. All right, well, anyway, I don't want to be here all day, so we're going to wind this up fairly quickly. I would show you Mr. Trump's stock. It'd be interesting just to see what it's having. Oh, interesting. Look at that. We had a really pretty, in fact, there's another one of those damn signals. In fact, we were talking in the day trader room this morning. This is such a beautiful example where, following that University of Michigan consumer sentiment number and the Chicago PMI, market was feeling a little bit better. And we saw the exact same thing happen about a week or so ago in the stock market. Market just rallied off a V bottom straight up. And I remember sitting there with the gang in our day trader room, and one of our vets just came back from a little mini vacation that he had. So he and I were just chit chatting away this morning, and was like, dude, just let's keep an eye on this. I think history's going to repeat itself. So again, there's another one of those sort of shooting star gravestone doji kind of candles. Probably not the best example, but not a bad one. One of our day traders actually did take this trade, and he was underwater for the week, and this one trade brought him back to profitable for the week. So way to go, Mr. Sacramento. Ironically enough, we seem to have a lot of people from Sacramento in the site here right now. But interesting to see. Stock market not so happy. Came right back to basically settlement. And now we're sort of waffling around, and probably the market ends a little bit up on the day. I think on balance, stocks are feeling relatively happy, but it almost looks like now we're just going to have a big zero-sum game. And my hunch is those Fed speakers, like I talked about just a few minutes ago, just came out and just said, don't expect any interest rate cuts here. The data still does not support, PCE well above that 2% target. Data does not support them cutting interest rates. And frankly speaking, I have to agree. If they're actually doing their job, like in my country, the data is coming out very inflationary, and yet the central bank is cutting rates, which is purely, you can clearly see that these people are they're puppets of the Rothschilds. They're puppets of the oligarchs, and they don't give a flying fuck about the standard of living of a typical Canadian, which is so pathetic. But anyway, that's here nor there. All right, so looks to me like now we're coming back to the flat line. This is also an interesting commentary too, because I do think that the NASDAQ, notice, and actually early this morning when the NASDAQ was just booming higher right out of the gate on the retail open, where did we see the money? And it was just bright green here, all in the semiconductors. And I think to a certain degree, what's going on here today, because it is quarter end, it is the end of June. This is also the end of the first half. This is a really important date where we have what's called window dressing, where mutual funds actually buy and sell the hot stocks on the very last day of business. And actually, I think stock settlement, I know stock settlement in Canada now is one same day settlement, or it's like 1 day settlement. So if that's the case, and I don't know exactly, I'm not totally certain about this, but if that's the case in the United States as well, that it's basically same day settlement, then that means that any funds or anything that go and buy these assets, they can report on their mutual fund statements that they were long things like Nvidia. And of course, people want to pull up their statement and go, see, look, my mutual fund is long Nvidia. I'm a badass investor. Look at me. It's all a load of horse shit. But anyway, it's the games that Wall Street play. Hopefully you like my little antics there. Okay, so, kind of a day. And I'll tell you, Mr. Biden didn't do himself any favors last night. That was a bit of a train wreck. But anyway, it is what it is. We'll finish off this free broadcast with a quick boo at Yield Corn and crypto. I suppose we can give you a little bit of a look here. It doesn't surprise me to actually see crypto and some of the crypto names perking up here. We had talked about a week or so ago that our overbought, oversold indicator was actually flashing an oversold condition within the crypto space. So to actually see some of these names rallying the way that they are and putting in little W's and bullish divergences and stuff like that, it doesn't surprise me. And as well, I've talked to you guys lots at length here. Once we get on the other side of this July 4th holiday weekend, I've just noticed in the past 10 years that I've played this game that crypto seems to firm up. All the kids, they're out of high school. Most of the males are comfortably set up in mom's basement, and they're getting ready to play the crypto game through the summer, which is what I often see them do. I'm actually seeing smatterings of the future bull. Remember, folks, and this is a great line for you to remember, write down, alpha, that Beamish guy actually trying to help you and give you valuable information. Today's bear market sets up tomorrow's bull market. But then conversely, you have to remember this, that today's bull market actually sets up tomorrow's bear market. So if we are ripping higher and we're in a bull, ironically enough, that's actually when you have to start preparing. Okay, well, we can't chase. We're not allowed to buy the tops. And Gucci sweater wearers are out there doing their idiot things. The public, not knowing what they're doing, are getting sucked into the public shill. You should have been preparing for a pretty healthy correction. And gee whiz, in altcoin land, we sure got it. I might argue now, of course, Gucci sweater wearers are long gone. If we actually start looking, and we'll just maybe give you a glance at the weekly commodity trend survey report here. I've got over half of the crypto top 30 actually spitting out, you know what? These are actually starting to look very attractive. That's over half of our index is basically spitting out, you ought to be paying attention. And this one tool here, when I was a commodities broker, I just followed the commodities market, and this was absolutely invaluable. I got to tell you, with the volatility of crypto, this is like a commodities trader on crack. These things move up and down so fast, but that's cool. If we get the market completely washed out and Gucci sweater wearers look like doofuses and they're absolutely destroyed, then that means that Brian's got to start getting interested on the long side. So maybe we'll spend some time in the after party going through that. In this short term, the one thing that bothers me is, number one, usually the big boys, they correct last, so, like the Dow stocks, usually they break last. And then, people see on the headlines, oh, Microsoft down a huge chunk. this must be a bear. Oh, it's the end of the world, right? And ironically enough, that's actually the end of the move, not the beginning of the move. And I think it's the same thing in crypto, to be perfectly honest with you. So really, I think the final shoe to drop here, and I just want to pull up the right page, sorry. The final shoe that needs to drop, that should drop, and when it does drop, then we'll know that we're good to go, is we just got to get these silly big boys to finally, do things like 50% retracements and finish off these bear moves here. I still think that Ethereum's not going to really do anything in earnest here until we get to the other side of that. I think it's July 2nd, which is interesting because that's right in the middle of this weird week coming up here. But I think on the 2nd, they're actually announcing the ETF. And Bitcoin didn't really do a hell of a lot for investors following its ETF event. So, and I don't have any buy signals here on Bitcoin. I think we're just trapped in a moving average sandwich. We are sitting in very attractive trade location. The only problem is that I don't really have a hell of a lot to get excited about on the indicators. They're all kind of like, nah. If anything, what we want to see is we want to see price dump and these indicators not go to new lows, which of course sets up divergence. And then once we get the divergence signal, then we can start hunting W's in price, and that actually sets up the trade. And I think that all develops over the next week or two. But the point here is there's nothing really for me to get excited about on either Bitcoin or, I hate to say it, actually Ethereum's looking better than Bitcoin. But we did just bang into my good old 13 EMA. This is why I like using it. You can see how it acted as support on the way up, then resistance, then resistance, then resistance. Here we are again, resistance. So, it'd be interesting to see. I might even argue, if somebody hold a gun to your head, what do you think the state of the market is right now? I would definitely say that rally peak that we saw, which came in overnight, is the top end of the range, and that tail is the bottom end of the range. So there's your playground over the next probably week. If we can W out here and start turning back up in earnest, okay, then we're going to need to have the fast moving average cross back above the medium term moving average. Then we can start thinking about the end of this bear and maybe looking for new highs. But as this stands right now, as you can see, the short is just working away. There's really nothing to do. We've had at least 50% of the range traded to, so stops should be at scratch. If this thing can firm up and take out the stops, and then we just walk away at scratch, big freaking deal. Then I'll probably be hunting longs again. Who knows? But as it stands right now, there is no reason for me to touch this. And so as a result, I'm just sort of sitting here twiddling my thumbs. And then final thought, altcoins. It's fascinating. I'm sure there's probably individual stories that are going to be driving these things. Here's a great example of one that just popped out of nowhere. And, I wouldn't necessarily even say I really have a buy setup here, but there is a nice 3-bar fractal. Clearly, this is the bottom end of the range. If you were able to take advantage of that, awesome. But this is the kind of market state that we're in. That a lot of these little junior names, they've been absolutely beaten into the ground here over the past 2 or 3 months. And all it's going to take is just somebody to sneeze and this goddamn thing could pop hard here. And this is a good example where you could, if you were nanny nibbling your way into this thing and all of a sudden you got this rally that in essence gives you that double, you could have actually a risk-free trade here going forward. Am I going to say that this is a pretty setup? No. But at the same time, too, I think the message of the market here is don't get too lulled into the bear case. The damage, the technical damage, especially on these altcoins, has been done. And now the question is, just be careful here. If you're short or if you're leaning short or, you're leverage trading short or something like that, just understand this, if anything, is a really good market message that this short trade's getting a bit old. And you could very easily have dead cat bounces coming out of nowhere that could actually produce little doubles for you quite easily. So that just happens to be that name. You can see, look at this little guy. He's trying to put in a W. There's a W coming in after a massive slide here. I mean, we could go through the list. There's tons of these names that are looking like this right now. And don't be shocked over the next few weeks if you start seeing this. And if anything, that's good, right? We're here to make money from trading. So this is if anything, this is a really good time for everybody to be really focused. Ironically enough, is the public even the slightest bit interested? No. All right, went a bit over, I guess about 10 minutes over what I should have, but oh well. Hopefully you feel like you got some good value out of that offering today. Slow and steady wins a race. Don't take no wooden nickels. Remember what your number one job is. Head on over and hang out in the after party for maybe next half hour, 45 minutes. Answer any of your questions. And see if we can give you some alpha heading into the weekend here. I tell you, there's a lot of these names that are looking very interesting, including also too, good old Sjord. He has a fundamental list that he really likes from a fundamental perspective. So sprinkle in a little bit of TA with the fundamentals. All of these names, of course, have been beaten down quite a bit, and these might actually even represent half decent rational ideas for you to consider as well. All right, let's leave it at that. Have yourselves a great day. See everybody for broiler chickens on Sunday. Slow and steady wins a race. Remember what your number one job is. Hugs and kisses. And the only thing left, Brian, to say to you good people is bye for now.